Hello, everyone, and welcome back to the Dakota Fundraising News Podcast. Today is Wednesday, December 11th. We are winding down for the year. You'll have 2 episodes this week, 2 episodes next week, and then you won't hear from us again until January. But we are pumped to bring you some news today. We do just want to call out a quick apology, I'd say, because I think all of our picks for sports last week are wrong. Penn State lost, close game, very fun to watch. Ian Gary almost beat Shavkat Rakhmonov, but did not quite yet. And then Konch, your pick also did not pan out.
That's why we talk about fundraising news and not sports bets.
Yeah.
So,
but speaking of things that we're hoping to pan out, we'll start with our article of interest. We have 2 notable CEO changes happening towards the end of the year. You see a lot of executive leadership changing. First, Prudential Financial has announced that the PGIM head of international business and global investments, Andrew Sullivan, has been appointed the CEO of Prudential Financial broadly. That will take effect March 31st, 2025, as Charles Lowry will step down. Charles will remain as the executive chairman of the board of directors. Across the hemispheres in Australia, ANZ, they're a large bank. If you're not familiar with their game, you can check them out in Dakota Marketplace. ANZ has announced that Nuno Matos, formerly the CEO of Wealth and Personal Banking at HSBC, will be taking over as their CEO. This news comes as they have recently acquired Suncorp Bank and are sort of trying to navigate this next stage of growth. What Nuno was able to do with HSBC was very impressive, so no doubt he must be excited about this upcoming challenge. That's pretty similar to job and role changes, that little segment we just did there. So Konch, why don't you kick us off to our regularly scheduled programming?
Yeah, definitely. Going over to Wells Fargo, they just recruited Managing Director Timothy Grumley over from JP Morgan. Grumley will be leading their New England team. This is following the departure of Brendan Krebs. He left to PNC Investments recently, according to media reports. In the new role, Grumley will oversee mainly expansion and sales in the New England region. And then moving over here, Elliot Vaughn has left Prairie Sky Financial Group to launch his own firm, Harbor Wealth Group. It's an independent financial advisory firm affiliated with IHT Wealth Management based out in Chicago. You just got back from Chicago, didn't you?
I did. How was that? It was cold.
Yeah, I'm sure. It's cold in the room that we're recording in right now, but we'll keep going. Lastly, I'll just close this off on a consultant update. Have a new VP of private debt over at Stepstone. That's gonna be Elijah McGowan. He's coming over from Mercer. We spent 2 years on the fixed income team, and then before that, 5 years over at RBK doing manager research in a similar asset class.
Nice. We'll jump over to our RIA merger and acquisition segment first. Sageview Advisory Group has purchased the Frederick, Maryland-based retirement fund On Track 401k. There's a retirement fund advisory firm, again, based in Maryland. If you're not familiar, Frederick, Maryland is sort of near Rockville, a little bit west of Baltimore. Fun fact, Rockville is where the band OAR is from, one of my favorites. Concurrent Investment Advisors down in Tampa, they have gone ahead and added 8 new advisors with a total of $885 million in client assets. 4 of those advisors are joining under the banner Canopy Asset Management, which is based in St. Simons Island, Georgia. I do not know where that is, so I can't give you the geography there, but I'm sure that you can find out more about that in Dakota Marketplace as well. Another 3 advisors of that 8 are joining out of the WPA Dallas branch. And then finally, they have 1 advisor coming over from a decade-long career at Edward Jones. That is Jason Hudson. So again, 8 new advisors, 4 coming from Canopy in Georgia, 3 coming from Wealth Partners Alliance, WPA, down in Texas, and then lastly, 1 just coming from Hudson Wealth Management.
Yeah, I'll close this segment off, Pat. So Serenus Wealth, we don't get to talk about them too much, but they're going to be going bi-coastal with a new office out in New York. Graham Mandel, he's joining over from Certuity. He'll be establishing the New York office. Serenus oversees approximately $1.2 billion in client assets. Their other office out on the West Coast is based out in Santa Monica, California.
Nice. Before you jump into searches, I did just Google where St. Simons Island is in Georgia, and no doubt here it's an island. And it is beautiful, actually. If I'm a wholesaler and I'm covering that region, I would definitely try to do some skitty scheduling there. It looks like a smaller, more private looking Savannah or Charleston.
sounds like a great place to expense some travel.
Yeah. Well, less great of a space to expense some travel, but still a great place nonetheless. Des Moines, Iowa. Why don't you tell us what's going on over there?
We might get some Des Moines locals sending you some mean messages after that one. But yeah, Pat, as far as searches and investments goes, they've disclosed a couple updates as far as an absolute return manager search, and then their 2025 private markets commitment plans as well. So I'll just go ahead and give you the update here for the $43 billion pension plan. They leverage Wilshire as their consultant. But for the absolute return search that they initiated earlier this year, this is according to a recent meeting from the December 6th meeting, so just last week, but they've recommended the following managers for this search. This includes AQR Helix Strategy, Brevin Howard Alpha Strategies Master Fund Limited, Bracebridge Absolute Return Composite, Blackstone Strategic Opportunity Fund, and the Navigator Fund. Again, these were recommendations from the meeting, so once we get some confirmation there, we will provide an update. And then staying with Iowa PERS, they've disclosed investment plans for private equity, private credit, and real assets for next year. In private equity, $700 million target there. The split between that, 65% to primaries, 20% to co-investments, and then 15% to secondaries, which we've talked about a number of times in recent episodes. On the private credit side, which we definitely have a ton on that coming up on this podcast still, but they're targeting $650 million to that asset class, $300 million to opportunistic, $100 million to direct lending, $150 to real assets credit, and then $100 to co-investments. And then within the real assets primary asset class, a $1 billion target investment there, so significant amount, $400 million to real estate, $500 million to other real assets, and $100 to co-investments.
Nice. I'll ship us up to Boston here with Massachusetts Housing Finance Agency Retirement System. We mentioned a search that they were doing for private equity a little while ago now. Quick update on that. They have approved a motion to allocate $8 million each to Constitution, HarborVest, and Mesirow. At least two of them I know off the top of my head, Constitution and HarborVest, both based in Boston. So nice to see them sticking with their roots there. District of Columbia Retirement Board, much larger than the last one we mentioned, but not quite as large as Iowa State. So a nice mid-size pension here. They have announced that they will be having an upcoming search. I'll also go through some investments quickly, but upcoming search for an international equity manager. They're preparing that RFP as of late November. Still no update on if it's just out yet, but once it is, you all will be the first to know. And then just easy transition to our investment segment, since we're already talking about DC. They use Makita for a lot of their alternative consulting, but they have made an investment in NCAP Energy Partners 12. That is an oil and gas fund. It was a $100 million allocation. Speaking of oil and gas, the next firm we'll talk about here, or the next allocator we'll talk about here rather, is Houston Police Officers Pension. So going over to Texas, sort of the hub of oil and gas for the U.S. And they have committed to Neuberger Berman's Private Debt Fund 5. That is a direct lending strategy, and that is a $50 million allocation.
Yeah, that's great. We'll shoot over to the Midwest Cincinnati retirement system. 3 pretty significant allocations here. They seem to be doing better than the Cincinnati Bears.
Bengals.
But Bengals, always mixing up the B's.
Leave that in. Don't cut that.
But $2.4 billion retirement system in Cincinnati. They use Marquette as their consultant. They disclosed 3 private equity investments, $15 million going to Sigler Guff Small Buyout Opportunity Fund 6, $10 million to PEG Co-Investment Fund 2, and then $5 million to the Timber Bay Fund 3. So Cincinnati, Houston, and DC retirement, 3 pension plans that we don't cover a ton on here, but happy to include them whenever we can. Pat, I think last time on the podcast you kicked us off with an update on Blondbox and their private credit ETF, first of its kind. Shortly hereafter, why don't you let us know what Virtus is doing in the market?
Yeah, again, we can't say it enough. The explosion of alternative offerings in the ETF space. These financial advisors, these RIAs, these retail investors, just demanding more and more access to alts. So Blondbox launches their private credit ETF. Nearly immediately after, Virtus Investment Partners has launched their own. This is a private credit CLO ETF. It's managed by Seix Investment Advisors, SEIX. I was not familiar with them before today, but an interesting firm. As you could expect, they are intending to identify and invest in strong and undervalued AAA rated private credit CLOs, bringing together Virtus's expertise in ETFs with Seeks's expertise in the CLO space. They do now manage 10 CLOs with approximately $3.4 billion in assets. So exciting to see this ETF as well. Jumping down to Miami, though, we'll talk about HIG here, and then Konch, I'll let you wrap us up with a London-based fund. So HIG has, a credit affiliate, Bayside Capital, and they have closed over $1 billion in the Fund 7 for that, credit affiliate that they're working with. It's the latest installment in this fund series. Obviously, there's been 6 before, and Fund 6 closed with $1.4 billion. Fund 5 closed with $1.5, and they've closed at just a little over 1 on this fund. So remaining consistent in the size of capital they're raising here. Global institutional investor base. You can learn more all about that in Marketplace.
Yeah, that's great. Last one here was shoot over the pond out to London-based Triton Partners. They've announced the closing of Triton Debt Opportunities Fund 3. This is oversubscribed at 1 billion euros, so a 40% increase over their predecessor fund, which made a $740 million close. That was back in October of 2020. Like its predecessor, Fund 3 is targeting mid-market European companies, particularly those in business services, industrial technology, and healthcare. Fund 3 has made 20 investments so far, totaling $500 million, with a realized value of over $150 million. Investor base for this fund includes pension funds, sovereign wealth funds, foundations, family offices, and insurance companies. It's hard to believe we're closing in on the end of the year here, Pat. Anything else today?
I'm all good. Like I said, we'll have a few more episodes this year, and then we'll be back next year. But look forward to hearing from us again on Friday. Thanks, everyone, for listening in.
Thanks, guys.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.